The global financial system is undergoing one of the biggest transformations in modern history, as digital currency begins to reshape how people earn, spend, save, and transfer money around the world. Governments, banks, technology companies, and financial institutions are exploring new forms of digital payments that may eventually replace traditional physical cash. For centuries, coins and paper money have been the primary way people conducted transactions, but in recent years, rapid technological innovation has introduced a new era where money can exist entirely in digital form, stored on smartphones, computers, and secure online networks. In 2026, the rise of digital currency has become a major topic of discussion among economists, policymakers, and everyday citizens. Many countries are experimenting with central bank digital currencies, also known as CBDCs, which are government-backed digital versions of national currencies. Unlike cryptocurrencies that operate independently of governments, CBDCs are controlled by central banks and designed to function as official legal tender in digital form. These systems allow people to send and receive money instantly using secure digital wallets without the need for physical cash. One of the main reasons digital currency is expanding so quickly is convenience. Modern consumers increasingly prefer fast and simple payment methods. Mobile banking apps, contactless payments, and online transfers have already reduced the use of physical money. In many countries, instead of carrying cash, people can pay for groceries, transportation, entertainment, and services with a single tap on their smartphones. Businesses also benefit from digital payments because transactions are faster, easier to track, and often more secure than handling physical cash. The global pandemic that affected economies earlier in the decade accelerated the transition toward digital payments. Many businesses encouraged contactless transactions to reduce physical contact, and customers became more comfortable using online payment platforms. As digital infrastructure improved, banks and financial technology companies introduced new services that made sending money across cities and even across borders faster than ever before. Cryptocurrencies have also played a role in shaping the conversation about digital money. Digital assets such as decentralized cryptocurrencies demonstrated that money could exist without a traditional banking system. Although these currencies are often volatile and not always widely accepted, they sparked innovation and pushed governments to explore their own digital currency systems. Many central banks began researching how blockchain technology and secure digital ledgers could be used to create stable government-backed digital currencies. Another important factor driving the rise of digital currency is financial inclusion. In many parts of the world, millions of people still do not have access to traditional banking services. Digital wallets and mobile payment systems can allow individuals to store and transfer money without needing a physical bank account. This technology has the potential to bring financial services to rural areas and developing regions where banking infrastructure is limited. However, the shift toward a cashless society also raises important questions about privacy, security, and government control. When every financial transaction occurs digitally, it creates detailed records of spending patterns. Some critics worry that this level of transparency could allow governments or corporations to monitor personal financial behavior too closely. Others are concerned about cybersecurity risks, including hacking, digital fraud, or technical failures that could disrupt payment systems. Another debate surrounding digital currency involves the future role of banks. Traditional banks have historically served as intermediaries that manage deposits, loans, and payment processing. If central banks issued digital currencies directly to citizens, it could potentially change how commercial banks operate. Some experts believe banks will adapt by offering new digital financial services, while others warn that rapid changes could disrupt existing financial institutions. The technological infrastructure behind digital currencies is also a major challenge. Governments must ensure that digital payment systems are reliable, secure, and capable of handling millions of transactions every second. Building such infrastructure requires significant investment in cybersecurity, data protection, and digital identity systems. Any weakness in these systems could undermine trust in the financial system. Despite these concerns, the momentum behind digital currency continues to grow. Countries across Asia, Europe, and the Americas are actively testing pilot programs for central bank digital currencies. Some governments are launching limited trials where citizens can use digital wallets to pay for everyday goods and services. These experiments are helping policymakers understand how digital currencies function in real world economic environments. Businesses are also preparing for a future where digital payments dominate global commerce. Many companies are investing in financial technology solutions that allow customers to pay instantly using mobile apps, QR codes, or biometric authentication systems. Retail stores, transportation networks, and online platforms are integrating digital payment options that reduce reliance on physical cash registers and traditional banking methods. At the same time, physical cash is unlikely to disappear overnight. In many societies, cash still plays an important role, especially for small transactions or in communities where digital infrastructure is limited. Some individuals also prefer cash because it offers a level of anonymity and independence that digital systems cannot easily replicate. Governments therefore face the challenge of balancing innovation with accessibility, ensuring that digital transformation does not exclude certain groups from the financial system. Economic stability is another key factor influencing the future of digital currency. Central banks must carefully design digital currency systems to avoid unintended consequences, such as bank runs, financial instability, or disruptions to credit markets. If large numbers of people suddenly shift their savings into digital wallets controlled directly by central banks, it could reduce the deposits that commercial banks rely on to provide loans and support economic growth. The evolution of digital currency is also connected to broader technological trends, including artificial intelligence, blockchain networks, and secure cloud computing systems. These technologies enable faster processing of financial transactions, while improving transparency and efficiency across global financial networks. As digital technology continues to advance, the integration between finance and technology will likely become even deeper. For individuals, the rise of digital currency may transform everyday financial habits. People could store their income in digital wallets, pay bills, automatically send money internationally within seconds, and access financial services entirely through mobile devices. The concept of carrying physical cash may eventually become less common, especially among younger generations who are already comfortable with digital payments. Looking toward the future, the question is not simply whether digital currency will grow, but how societies will manage this transformation. Governments must develop regulations that protect consumers, maintain financial stability, and ensure fair access to digital financial services. Businesses must adapt their payment systems and security practices to handle new forms of digital money, and individuals must learn how to navigate a financial environment where technology plays a central role in every transaction. The rise of digital currency in 2026 represents a pivotal moment in the history of global finance. Just as credit cards and online banking once transformed the way people interact with money, digital currencies may redefine the financial landscape. For the next generation, whether cash eventually disappears entirely or continues to exist alongside digital systems, the world is clearly moving toward a future where money becomes increasingly digital, connected, and integrated into the technology that shapes everyday life.